Hey, what's up everyone? In today's video, I want to dive into what sets the best traders apart from everyone else. Now sure, the markets are full of opportunities, but they also bring challenges. Most traders can figure out how to spot opportunities, to buy or sell at the right time, but here's the catch. Knowing when to act doesn't mean you've learned how to think like a trader. The real difference lies in your mindset. Let's imagine going to the moon. It's visible almost every night. So close it feels like you could reach out and touch it. But in reality, getting there is incredibly hard, and only a few people have ever made it. Trading successfully is a lot like that. The markets are always moving, offering chances to make money every day. It feels like success is right there within your grasp until it slips away. For those who figured out how to be consistent, making money in the market is like turning on a faucet. They can tap into the flow with ease, taking what they need when they need it. It seems almost magical to the rest of us. For these traders, the moon isn't a distant dream. It's a place they've reached, and they know how to get there again and again. But for most traders, the story is very different. They feel like they're almost there, so close they can taste it, but success keeps slipping away. Instead of consistency, they face emotional ups and downs. Excitement when things go well, followed by fear, frustration, regret, and disappointment when they don't. The only thing consistent for this group is the pain they feel. So what separates these two groups? Are consistent traders smarter? Do they work harder? Do they have better systems or tools or insider knowledge? These sound like reasonable explanations, but they're not the real answer. Think about it. Most of the people who fail in trading are some of the smartest and most successful people in society. There's doctors, lawyers, engineers, CEOs, and entrepreneurs. And some are the best market analysts. They can predict price movements with precision, but are terrible traders. Intelligence and good analysis help, but they're not the key to consistent success. The real difference is this: the best traders think differently. Now that might not sound groundbreaking, but it has huge implications. Your thoughts shape your actions, and in trading, your actions directly impact your success. Here's something to think about. We all believe we see the world in the same way as everyone else, until we don't. Maybe you had a disagreement with someone about something you both experienced. You saw it one way, they saw it another. That's because the way we think is unique, even more unique than how we look. When it comes to trading, this difference in thinking makes all the difference. Successful traders don't just follow patterns or react to the market. They've trained their minds to see things from a perspective that allows them to act with confidence and consistency. But there's good news. This way of thinking can be learned. Now, if you're ready to rewire how you think about the markets and yourself, you're already on the path to success. So what makes the best traders think differently? The real difference lies in the mindset. Consistent winners have developed a unique set of attitudes that keep them disciplined, which is they stick to their plan no matter what. They're focused, which means they don't let distractions or emotions cloud their judgment. And they're confident. They trust their decisions even when the market gets tough. This mindset helps them avoid the fears and mistakes that trip up most traders. It's not just about knowing the markets, it's about how they think in the moment. Well, let's talk about why attitude matters more than skill. Think of it like a sport. You can learn the perfect golf swing or tennis stroke, but what determines whether you win consistently isn't just technique, it's your attitude. The same is true for trading. Skills and knowledge are important, but without the right mindset, you'll struggle to succeed consistently. Then comes along the painful path to growth. For most traders, reaching the threshold of consistency doesn't come easy. It's a process often marked by emotional and financial pain. They try, they fail, they learn, sometimes the hard way, before they finally develop a mindset needed to thrive in the market. That being said, there are a few exceptions. Traders may have grown up in families that live trading and absorbed the right attitudes early. Then there's those lucky enough to have started their trading career under the mentorship of someone who not only understands trading, but knows how to teach it. For the rest of us, the journey to thinking like a trader is one of trial and error. But there is good news. The right mindset can be learned. It starts with understanding what's holding you back and making a commitment to change how you think about trading and yourself. So here's a real question. Are you ready to start thinking like a trader? Let's talk about why emotional pain and financial disaster are a common trait in trading. The journey to becoming a successful trader is full of unexpected challenges, and for most, emotional pain and financial setbacks are unavoidable. The primary reason is straightforward. Most traders don't start with the proper guidance, but the deeper truth is a little more complex. Trading is riddled with paradoxes that conflict with the way we naturally think and behave in everyday life. At its core, trading is a paradox. Now, what is a paradox? A paradox refers to something that seems contradictory or counterintuitive. In the trading world, many attitudes and principles that work well in daily life are counterproductive in the market. This disconnect leaves most traders unprepared for the psychological demands of trading, which results in emotional and financial pain. Here's a common example. Risk-taking versus risk acceptance. Now, trading is inherently risky because no trade offers a guaranteed outcome. Most traders assume they're risk takers simply by participating in the market. However, while placing a trade involves risk, accepting that risk is an entirely different mindset. Ask yourself this. When you place a trade, have you fully accepted that it might result in a loss? Do you truly embrace the possibility of being wrong and the consequences of losing money? For most traders, the answer is no. Many take pride in the idea of being risk takers, yet emotionally, they resist the reality of risk. This resistance creates a psychological gap that hinders consistent performance. The best traders operate with a mindset that fundamentally changes their relationship with risk. They place trades without hesitation because they accept the inherent uncertainty of the market, meaning there is no hesitation in executing their trading plan. Then they have the freedom to exit. They can admit when a trade isn't working and exit without emotional conflict or hesitation, even if it means taking a loss. And thirdly, they are emotionally detached from losses. Remember, accepting risk allows you to avoid emotional pain when a trade doesn't go your way. For these traders, losing a trade doesn't affect their discipline, focus, or confidence. They view losses as a natural part of the process. Now let's talk about why risk acceptance is so difficult. For most people, accepting risk is incredibly challenging because of what's at stake. Trading forces us to confront two of our greatest fears in nearly every moment we're in the market. There's the fear of losing money and the fear of being wrong. Money represents security and achievement, so losing it feels like a direct threat to our well-being. And being wrong, well, it can feel humiliating and undermine our confidence. These fears trigger emotional pain, which our natural instincts tell us to avoid. While avoiding discomfort is logical in daily life, it's counterproductive in trading. Trying to avoid something that's inherent like risk creates behaviors that sabotage your success. Here's the paradox. To succeed, you must embrace what you fear most, losing money and being wrong. This requires rewiring your mindset to view losses as part of the process, not as threats. Avoiding losses and mistakes will paralyze your decision-making and lead to inconsistent results. But by accepting them with confidence, this frees you to trade without hesitation or emotional conflict. Learning to accept risk is one of the most challenging but essential skills for a trader. It demands that you face and overcome deeply ingrained fears and natural tendencies. But for those who do, the rewards are profound. It's the ability to trade with clarity, confidence, and consistency. In trading, the paradox of risk is not just something you need to understand. It's something you need to master. Only then can you begin to unlock the full potential of what the market has to offer. Now, how can we remain disciplined, focused, and confident in a world of constant uncertainty? Success in trading demands an extraordinary mindset, one where uncertainty is embraced rather than feared. For most traders, this feels counterintuitive because human nature instinctively seeks certainty and avoids risk. Those who master trading do so by achieving a fundamental shift in their thinking. They learn to redefine their relationship with risk, enabling them to accept it fully and trade without hesitation or emotional conflict. What is the key to risk acceptance? Well, it's not just your mindset, but it's a skill. It is the most critical skill a trader must develop. It is one that most traders neglect. Without this skill, the constant uncertainty of the markets can lead to emotional pain, hesitation, and many costly mistakes. So what happens when you accept risk? If you accept risk fully, the information the market provides will no longer feel threatening or painful. Losses and setbacks are no longer interpreted as personal failures, but as natural outcomes in a probabilistic environment. Risk acceptance allows you to perceive the market objectively, free from fear and distortion. Every tick in the market becomes neutral data, not something to be feared or avoided. And when fear no longer controls your decision making, you can trade with the discipline and focus necessary to achieve consistency. An objective perspective is a hallmark of a successful trader. This allows you to analyze the market and make decisions without the interference of emotional biases. Instead of fearing what might happen, you interpret market data as possibilities rather than threats. To cultivate this mindset, ask yourself this: am I willing to lose on this trade without emotional discomfort? Can I let the market tell me what's happening without projecting my fears onto it? When the markets become a source of information rather than emotional pain, trading transforms. It becomes a process of managing probabilities with confidence and ease. Next is learning to accept risk. Developing the skill of risk acceptance requires practice and self-awareness. It begins with acknowledging the inherent uncertainty of the markets and understanding that no single trade defines your success. Over time, you can train yourself to focus on long-term consistency rather than short-term outcomes. In trading, learning to accept risk isn't just a skill, it's the foundation of success. Without it, the market will always feel threatening. But with it, you can approach trading with clarity, objectivity, and confidence, turning uncertainty into opportunity. Let's go over some of the common pitfalls most traders face. Most traders can relate to common mistakes, such as entering trades too soon, exiting too late, failing to take profits, or letting small losses grow into larger ones. These errors are part of the trader's journey and often stem from emotional and mental barriers rather than market conditions. What I have found is the market is neutral. It simply provides information. It's our attitudes, perceptions, and decisions that shape our trading results, for the better or for the worse. These mistakes are not caused by the market. Rather, they arise from faulty attitudes. Attitudes which are beliefs and perspectives that influence how we interpret the information the market presents. For example, the fear of being wrong, losing money, or missing out on an opportunity leads many traders to act impulsively or irrationally, resulting in unnecessary losses and missed opportunities. Let's break down that fear. The root cause of many trading errors can be traced to four primary fears: the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. These fears impact decision making. They narrow your focus and often lead to inconsistent results. Fear causes you to freeze, hesitate, and act impulsively. This can result in reactive decisions such as cutting your profits too soon, rationalizing your mistakes, moving your stop losses, or holding on to trades in hopes of a reversal. Ultimately, fear undermines your ability to act objectively. When you are afraid of being wrong, your mind becomes fixated on that fear, distorting your perception of the market and preventing you from seeing the possibilities beyond the immediate risk. The core contradiction in trading is this: if you fear being wrong, the fear itself will influence you to act in a way that reinforces that fear. In essence, fear closes your mind to the full range of possibilities and narrows your perception of the market. As a result, you may hesitate or make mistakes that ultimately make you wrong or lose more than you intended. Many traders are unaware that their attitudes, the way that we think about risk and uncertainty, are the primary obstacles to consistent performance. In fact, most of the issues traders face are not caused by the market. They're caused by their internal beliefs, fears, and reactions. So what's the answer? More analysis? Let's talk about the fallacy of more analysis. There is a common misconception that better market analysis will lead to more consistent results. However, this black hole of analysis is a trap. The market is inherently unpredictable. No amount of analysis can eliminate risk. Trying to predict every possible market outcome only leads to frustration and a false sense of control. If you constantly fear being wrong, no amount of market knowledge will give you the confidence to stick to your back-tested trading plan. This desire for certainty often causes traders to overanalyze and miss opportunities. You become paralyzed by an attempt to understand everything about the market, and as a result, become less effective at executing trades. So what's the solution? The solution is you need to shift your mindset. The solution is not more analysis, but learning to accept the inherent risk in every trade. Successful traders have mental flexibility. They can act decisively based on the market signals and accept that uncertainty is part of the process. They are not afraid of making mistakes or losing money. They view those as natural outcomes of trading, not failures. To become a consistently successful trader, you must 1. Redefine your relationship with risk. 2. Accept that uncertainty is avoidable in trading. 3. Learn to execute your trading plan without fear or hesitation. And 4. Trust the process. You've tested your trading plan and proved to yourself it works. Now you must trust yourself to make trading decisions without overthinking or second guessing. When you truly accept this risk, you will stop rationalizing mistakes and letting fear control your decisions. You'll be able to stay focused, confident, and disciplined, which will significantly improve your trading results. In a nutshell, you are on a journey of learning to trade with confidence. The most successful traders are those who have learned to trade without fear. Confidence doesn't come from knowing all market variables, but from knowing how to handle the uncertainty that comes with every trade. Once you stop trying to eliminate all risk and start accepting it, you'll see how much easier trading becomes. Now, as you progress, keep in mind that the successful trader you want to become is a future projection of yourself. It's one that requires growth and adjustment. Your current beliefs and attitudes may hold you back, but by adjusting your mindset and learning to trade without fear, you will unlock your full potential as a trader. So to wrap up this segment of the masterclass, successful trading is not about mastering the market. It's about mastering yourself. By managing your attitudes and beliefs, you can develop the mental flexibility to make clear, confident decisions in an uncertain market. Now, let me emphasize that the biggest challenge is not about finding the perfect strategy, but about mastering your mind and embracing the uncertainty that comes with every trade. If you enjoyed this video, please like and subscribe to the channel. This is the 5th video in this series, and I'll be making a new video each week that picks up where we left off. My goal is to give you the tools I use to make money consistently without the stress. See you on the next one.